Night. And now some good news. Investor and retirement optimism is up, at least according to Wells Fargo's calculations. Wells Fargo released their quarterly investor and retirement optimism index today, and sentiments are the highest they've been since 2007. So why do people seem so optimistic? Wells Fargo Retirement Executive Vice President, that is, Gerri joins us. Joe, thanks for coming on the show. So why are people upbeat in your survey?
Well, as you mentioned, it's the highest surge since 2007, and I think the enhanced optimism is really driven around the outlook for their own personal finances and an improved economy. So they're really optimistic about the stock market in general as a result.
I thought what was interesting is this number that they're saving $108 a month due to low gas prices. This has really paid a dividend, and a lot of economists have been asking, where did that money go? Well, it went to savings, right?
Which I think is a really good step, Gerri. As you mentioned, $108 in monthly savings. People really step back and improve their personal balance sheets. I think a lot of economists thought it would be spent on consumer goods and products, and instead 37% used it to pay down their debt or bills, and a third said, I'm going to increase my savings rate. So those are all really positive things that investors did with the enhanced savings.
Now, according to your survey, and I'm frankly shocked by this, non-retirees saying that they'll have enough money for retirement, because every expert I talk to says we won't.
Well, it's really interesting. 76% of the people that we talked to said they feel very confident or somewhat confident about their ability to have enough money for retirement. And I think it really is driving around the improved economy and their enhanced savings rates, and also their risk management. I think that although they're bullish on the market, they're really holding their course and feel properly allocated, and it's more about managing risk today than it is about chasing returns. So I think investors are overall optimistic about their own personal finances.
Let's talk about 401ks for a second. Lots of folks, a little more than a third, say they need help managing their 401k account. Does that surprise you?
It doesn't. I mean, one of the things I think is really important is, the whole industry has been built on sort of consumer-directed, self-directed 401ks. And I think what we're really finding here is people move to technology and web. There's a group of people, and it's over one-third, that said, I really need some help. And one-on-one conversation is really important to me. So much so that 70% said they would benefit from a financial professional or one-on-one meetings or a webinar or a meeting to help them make financial decisions. And most of that was geared toward help me with my investments, help me allocate my assets. So I think it's a wake-up call to the industry to say, don't lose sight of people really need one-on-one help to help improve their financial outcomes.
I think people are looking for guidance, too. Joe, thanks for coming on the show tonight. We appreciate your time.
Hey, thanks, Gerri.